So lately, I've been seeing a lot of videos about people complaining about how the job market isn't doing all that great. People are talking about how they're applying for jobs and they're not getting any callbacks. They're not getting any responses. There was even one person that I think applied to like 1,400 jobs. Not sure what the time frame was, but regardless, that's a lot of jobs, and he wasn't able to land any jobs. So a lot of people are just struggling that they're going on the internet and they see all these job openings, but they're saying that no one is hiring, right? So people are trying to figure out like what's going on. Why are they posting jobs, but yet it seems like a lot of people just aren't finding any work? Well, a good reason for that might be a lot of these companies are just busy laying people off. And lately there's been a lot of layoffs, especially in the month of January. Obviously you heard of, I think UPS yesterday laid off about 1,700 managers. Then you got Amazon, you got Alphabet. There's a lot of companies going through layoffs right now. And so if you're someone that's struggling to look for work, I think right now they're just going through the process of laying people off. Not sure if they're going to obviously get into the hiring process, but right now we're living in times where obviously, companies are trying to figure out when it comes to their business and their profits and trying to figure out like what they're going to do in terms of hitting their numbers. So for a lot of people are starting to wonder, all right, is this the beginning of the recession? Even though for a lot of people, some people already think we're in a recession. But when you start to see layoffs happening in this form of fashion, then you start to say, all right, is this the beginning of the recession? Right, and not only that, but not only do you have the layoffs happening, but now you have the news where Jerome Powell and the Feds are talking about how in March a rate cut is not likely to happen in March, and there's a lot of investors, especially on Wall Street, that were expecting rate cuts to happen as early as March. And when you see Jerome Powell come back and say, yeah, it's probably not going to happen, then you saw what happened with the markets yesterday, where they kind of tanked. So and this is what they're expecting because they understand that inflation is starting to level out, starting to go down a little bit, and a lot of people on Wall Street are like, all right, this is when we need to start rate cuts. But of course, the Feds and Jerome Powell, what his goal is he wants to make sure his goal is to get inflation down to 2%, right? And until it gets down to that, he wants to make sure he's not cutting the rates too much, because if you cut the rates down to a level where it increases the demand, then you're gonna get inflation again, right? And he doesn't want to do that, so he's slowly trying to slow play this, and hopefully that he can get that soft landing in terms of avoiding that recession. But Wall Street is waiting for these rate cuts to happen so they can get access to cheap money. But you got to be careful with that. So Jerome Powell is trying to figure this thing out and trying to see, all right, when can he cut rates? But depending on how inflation looks like, it doesn't seem like he's going to be doing that yet, right? Especially not in March at the earliest. So we're still waiting to see when he's going to do it, or when it's not completely thrown out the table it's going to happen in March, but it's not likely. So with all this going on, you start to wonder, right, is this the the recession coming? Because you obviously have jobs being slowed down, people are not hiring, people being laid off, and then people are not expecting that rate cut to happen. So you're like, all right, what's this a sign of? So I got an article here on CNBC, right? And it says January hiring was the lowest for the month on record. So I'm gonna just read it. It's a quick article. I'll read that and see what's going on in terms of why, for a lot of people when they were looking for jobs, why it seemed like no one was hiring. And obviously, this is gonna talk about that a little bit. So it says, companies announced the highest level of job cuts in January since early 2023, a potential trouble spot for a labor market that will be in sharp focus this year, according to a report Thursday from Challenger Gray and Christmas. The job outplacement firm said planned layoffs totaled 82,307 for the month, a jump of 136% from December, though still down 20% from the same period a year ago. It was the second highest layoff total in the lowest planned hiring level for the month of January, data going back 2009. So that just tells you, man, there's a lot. January was a bunch of layoffs, man. There was a whole bunch of layoffs going on, and that could be a reason why if you were someone looking for a job, that's probably why you weren't getting any callbacks. So it says technology and finance are the hardest hit sectors, with high-flying Silicon Valley leaders such as Microsoft, Alphabet, and PayPal announcing workforce cuts to start the year. Amazon also said it would be cutting, as did UPS, in the biggest month of layoffs since March 2023. And that's the thing, these tech companies, a lot of these tech companies were over hiring. They hired a bunch of people, right? When that money is cheap, interest rates are low, money is cheap, you're going to just hire a bunch of people. But once those interest rates going up, then it starts to get expensive and it starts to cut into your profits. Then you start saying, all right, you know what? We need to reduce our expenses, and usually labor is the first thing to go. So it says waves of layoff announcements hit U.S.-based companies in January after a quiet fourth quarter, said Andrew Challenger, senior vice president of the firm. The cuts were driven by broader economic trends and the strategy shift towards increased automation and AI adoption in various sectors. Though in most cases, companies point to cost cutting as the main driver of layoffs. Financial sector's layoffs totaled 23,000, the worst month in the category since September 2018. Tech layoffs totaled 15,806, the highest since May 2023. Food producers announced 6,656, the highest since November. High costs and advancing automation technology are reshaping the food production industry. Additionally, climate change and immigration policies are influencing labor dynamics and operational challenges in this sector. The report follows news Wednesday that the ADP that private payrolls increased by just 107,000 for the month. On Friday, Labor Departments will be releasing its non-farm payrolls, which is expected to grow 185,000. So yeah, so they're blaming obviously automation and stuff like that, but in reality, they understand that debt right now is very expensive. Obviously, their profits they're not showing the profits that they want to show, and obviously they want to make their margins. So like I said, usually when they're trying to reduce expenses, labor is one of the first things to go, and that's why you see a lot of companies readjusting themselves right now and that's why they want the Feds to cut the interest rate so they can get back access to that cheap capital. So so this is like, if you're someone that's been wondering why you haven't been getting that call back for these companies you apply to, like I said, they're probably busy laying people off. And this is something you have to worry about, because like, what if this is the beginning of that recession, right? So if you and you want to prepare for this, right? You want to make sure if you're someone that has a lot of debt, right? A lot of consumer debt, you want to make sure you're paying that down, right? Because when times are gonna get rough, then you want to make sure that you're not over leveraged, or you're not slave to a lender where your obligations are to a lender or somebody that you owe money to, rather than making sure you're taking care of your home, right? If you're someone that's investing in the stock market, obviously, make sure you just keep doing what you're doing, like investing in ETFs, right? You want to make sure you just keep doing what you're doing. Obviously, this is not financial advice, but you want to make sure you're doing the things that you're doing, and just making sure that your finances are in order, because who knows how this, you hear in the media, they say the economy is good, right? The economy is doing well, but if you talk to regular day people, that's not the case, right? People are struggling, things are expensive, people trying to live in paycheck to paycheck and just trying to figure out how to get by. And depending if this is the beginning of something that to come, then you want to make sure you're prepared, and you want to make sure that you're not holding on to too much consumer debt, and just struggling financially. So that's all I got for you guys today. Let me know what you think. Leave a comment down below. Hit the like button, share, and if you haven't done so already, make sure to subscribe. All right, so you guys take care and have a good one. Later.